Miles Shipside of Rightmove joins us now from London. Thanks very much for speaking to us, Miles. So would you go as far as to say that it's a buyer's market right now?
Absolutely. There is a limited amount of property coming on compared to previous years, which is underpinning prices, but buyers that have got the deposits that can get a mortgage are in a very strong position, and we forecast that that will continue next year as well.
And the best case scenario next year, that prices will stay unchanged. What happens, though, if we see a double dip or an economic slowdown?
Critical thing really is base rates. If they remain unchanged, that'll mean that those people that are in negative equity, that have got arrears, 175,000 households have got arrears of 2.5% or more of their outstanding balances, and a rise in interest rates could tip those people over the edge and lead to an increase in repossessions. If you get a lot more forced sales, then I think we could see falls of up to 5% next year. But on the basis of stable repossessions and stable base rates, then best case scenario, broadly flat on prices, which is actually where we've ended up this year.
Now, it's worth mentioning, it's worth certainly making the distinction between various parts of the country. Price drops are likely to be more concentrated in the north of England, right? London proving to be the most resilient, you might even say recession-proof if you're talking about central London.
Absolutely. It all depends on the amount of properties coming onto the market, and an increase in supply would outstrip demand. And the north of the country, it's where most public employment is, so the northeast and northwest could actually see more repossessions, more forced sales, and that would push prices down. South of the country more buoyant, and we actually think average asking prices will increase in the London area by 3% or more in the next 12 months. But that means that other parts of the country are going to have a tougher time, and prices could well fall there.
I've seen fairly strong, relatively strong economic growth, you might say, in the UK this year. But how much are you expecting the recovery to slow as a result of austerity measures? Government cutbacks are really going to bite next year, including, of course, nearly 500,000 public sector workers that are going to be out of work, going to add to unemployment considerably.
Absolutely. This is the critical thing. The positive is, for these unfortunate people, if they are made redundant, there should be some payoffs, and therefore that ought to keep them in their houses and keep them paying their mortgages, perhaps throughout 2011. I think 2012 is probably a crunch year as well, because the forbearance that banks have shown over the last couple of years has got to come to an end sooner or later with people that are in arrears. And the danger is, if prices fall and base rates increase, plus the unemployment, people are going to look to put their property on the market, and it may well be that 2012 is going to be the tough year, and we'll end up with a broadly flat but low volumes of transactions 2011, and 2012 could be when we have to face some of that reality.
Miles Shipside, Commercial Director of Rightmove.co.uk in our London studios. Thanks very much.